Hi, let's cover my Elliott Wave analysis on Bitcoin, starting with what you see on my chart, which is basically a summary of the different Elliott Wave scenarios, and it all depends on this question: how many wave 4s and 5s will we get? A wave 4 is a 3-wave corrective structure to the upside, and the wave 5s are motive waves down to create another low. Depending on the amount of wave 4s and 5s, probabilities will either increase or decrease for certain Elliott Wave scenarios, which in turn also has an effect on the continuation of a bull market or a bear market. If price can create a low at one of these three, a bull market is still an option. However, if price is going all the way down here after an additional 1112 that still has to be printed, the bulls are getting into trouble. Because if we can count an impulse down from the all-time high, which then is going to be a 1, 2, 3, 4, a 5-wave structure, you're looking for a correction and continuation to the downside. In other words, the probabilities increase for a bear market significantly if price can go all the way down here. It does require price to print an additional 3, 4s, and 5s, which is going to take a while. And in the meantime, we can keep an eye on the 0.618s, which serve as an invalidation for wave 4s. If this low over here is a significant low after a 3-wave ABC to the downside here, we would like price to move towards the upside, and step 1 would be for price to touch the 0.618 at 104.3k. This will significantly decrease the probabilities for another leg down, labeled as a 4 and another 5. Increases the probabilities that this is a more significant low. However, additionally, what I would like to see is price move up to at least this low here at 106.3k. That would be step 2. If price can make it up here, the probabilities significantly increase that this is a 3-wave corrective structure, which opens the door to moves towards the upside. Now, the move towards the upside can be this flat as covered yesterday, because in a wave B, you like to see a 3-wave move to the downside, and a common target area for wave B is the 1.236 to the 1.38 Fibonacci taken from the start to the end of wave A, giving you an area between 98.6 and 100.5k. You don't want wave B to move to the 1.618 at 95.5k, because that significantly decreases the probabilities for a flat structure. So the 1.618 would not be good. Now, in this scenario, you want price to move towards the upside in 5-wave structures, which is a big difference with the wave 4s, as the wave 4s should be 3-wave structures. However, the bulls like to see a low formed, and they like to see a 5-wave move towards the upside. Now, a flat, what you see on my chart, is a possibility if price ends over here or creates one more low, as long as this low is not touching the 1.618, as that would impact the probabilities for this scenario. And what we want to see is a 5-wave structure to the upside, or a multi-1-2. But a multi-1-2 also starts with a 5, then a 3, 5, 3, 5, 3, and then you fly. You're basically looking at a larger impulse to the upside. Generally, a minimum target for a flat is the end of wave A, which is the high at 116k. Now, if price can move towards the upside and touch the 618, step 1, and move to 106.3k, step 2, it at least opens the door for that scenario and higher prices to follow, and it becomes interesting to look for areas of resistance that we have to the upside. I do believe that if price is going to move above this high at 116, it will fill this gap. We have a bit of a gap over here. There's not a lot going on. The double top liquidity was already taken. So if price is going to make it back up here, I would expect price to just continue towards the upside to like 120, 121. Now, if price is going to continue creating wave 4s and 5s, right, we just have to observe the local price action over here and keep an eye on the 618s and here 106.3k. But if price would continue creating 4s and 5s, then the probabilities will slowly increase for these structures. Either an ABC down from the all-time high, 5, 3, and a 5, or the impulse, which is a problem for the bulls. So if we then look at that, then this is what we're dealing with. So in this scenario, we would then like to see a wave 1, 2, 1, 2, 3, 4, 5, 4, 5, maybe another 4, 5. This would be bearish. This is still bullish potential. In this particular scenario, however, we don't like price to move to 106.3K. The invalidation here, because you don't want wave 4s to overlap with their wave 1. And if this locally would be counted as a wave 4, we don't want the 618 to be touched. That is the reason why the 618 is step 1 and 106.3K is step 2 for the bulls. So this is arguably your quote-unquote more bearish scenario, as you're still looking for some more 4-5s. Very likely you're going to invalidate wave B of a flat, as price will then very likely move to the 1.618. It's not invalidating a flat, but it will significantly reduce probabilities. You're going to look for some lower areas of support. Preferably, price creates a couple of lows on decreasing volume as well into areas of support, which provide a long opportunity, and then look for price to move towards the upside. Now, an ABC is still bullish. 1, 2, 3, 4, 5, 3, 1, 2, 3, 4, 5. Inside wave 3, we then have a sub-degree count, which is a 5-wave structure. This would be a wave ABC. An ABC leads to price moving up and the potential of a bull market to continue. If you, however, get another 4 and another 5, that's a problem, because then the probabilities increase for an impulse to the downside, which means 3-wave up and down we go. But as you can see, it will take some time. Right? It will take some time, and it will take multiple wave 4s and 5s. Now, if we have a look at the news, then today and on Friday, we have some high impact news at 4 p.m. Central European time. So just make sure you trade safe, because it can increase the volatility on the chart. And then we get to the levels. So these are my horizontal volume support resistance levels. These are my favorites. The levels that I had over here that are touched are removed. And then we get to my time frame horizontal levels. And then we have the 2-day order block still here at about 120K. Then we get to the conclusion. So we got to keep an eye on the 0.618s, because once the probabilities are highest, you're looking at wave 4s and 5s, the 0.618 serves as an invalidation pulled from the end of 2 to the end of wave 3. Now, from a trading point of view, once you're looking at wave 4s and 5s, you're in the take profit areas for shorts, because you like to enter in the 1-2s and you like to exit in the 4-5s. And of course, possibly, you already have a finished structure here, because we can count a potential finished ABC as explained at the beginning. It just depends on this move to the upside, which I then also write over here, because one has to observe the bounces, like locally, to the upside to decide if this is another 4 and a 5 down, or if a low is in and you look for price to continue. It depends on the structure on the lower time frame. But this is still a very young structure here, so I like to give it a little bit of time. The ideal scenario from an Elliott Wave trading point of view, like the easiest recognizable scenario, would be that you end a structure on decreasing volume with some more lows. You can now see that over here in the low, we have a high amount of volume. What would be ideal from a trading perspective is that you get a couple 4-5s, or at least one more, on decreasing volume into areas of support that I just showed, the levels that I have. It would make looking for longs easy. Sniping a low on high volume from an Elliott Wave trading point of view is quite risky. One would typically then prefer to wait for a 5-wave structure to the upside and then a 3-wave corrective structure down, which then gives an opportunity to look for a long and a leg towards the upside. Of course, we know where probabilities change locally as well, with the 618 and price here touching this low at 106.3K. But ideally, from an Elliott Wave trading point of view, having a 5 up, 3 down would be a nice confirmation. In general, we have to just keep an eye on the 618s to invalidate a wave 4. And bulls ideally just move to at least 106.3K. I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.